Hi, this is Pia, and today it's my pleasure to have with me Radhesh Kanumury, managing partner of Suvan Ventures, a venture fund specializing in early stage B2B Indian cross-border SaaS companies targeting global markets. Prior to his role at Suvan Ventures, Radhesh co-created Arca Venture Labs, dedicated to investing in mentoring and fostering connections for B2B startups in the India-US corridor. So let me welcome Radhesh Kanumury ji. Welcome. How are you doing?
I'm doing good. Yeah, thanks for having me.
Thank you so much, Radhesh. Pleasure is all ours, but I want you to talk a little bit more about yourself.
Yeah, just to add what you had said, Pia, Suvan Ventures invest in early stage B2B focused Indian SaaS companies looking into the global markets. Prior to this, I had co-created a venture fund called Arca Venture Lab with three partners with the same investment focus as Suvan Ventures, and we made 27 investments under my leadership, out of which we got 5 exits, and 15 companies got their follow-on up round from marquee investors. And prior to our Venture Labs, I was with IBM for 18 long years. I started my career in IBM as a tech specialist in the services arm. Went on to become a software architect in the software division of IBM. Was designing solutions for enterprise and system integrators and ISVs across a whole array of technologies, right from application servers, databases, application integration portals, security, business intelligence, data warehousing solutions, infrastructure management. And the last 3.5 years, I was heading the startup initiative of IBM India, where I worked exclusively with B2B startups and worked with quite a few of them to help them to scale in their journey. So that has been my quick background, Sophia. Yeah.
Radhesh, I have just a very simple question for you. What is venture capital and why is it important for startups?
Yeah, so the way venture capital works is that VCs they provide the capital to startups, and in exchange to that, they get certain equity, and this price of this equity, the stock that the VCs are getting, they are typically determined by the VCs or other institutions typically, and once they invest into uh, that particular company, and when the company scales well in terms of the revenue, in terms of the traction, the obvious thing is that their valuations, the price in which the price of the stocks also will increase. And if they go and hit the IPO market, it's then actual value of that particular equity is realized. So that's typically how VCs work in terms of investment. Now, why this is important is that it provides three things. One is the capital that's needed by the startups early in their journey for doing different aspects of their business, which could be like around R&D, it could be around expansion to new markets, it could be around uh, 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 engineering. So different things they can go about spending. And the other thing that VC can provide very valuable input is the insights around the company. VCs typically work a lot across different portfolio companies, and they kind of tend to have a sense of the direction in which the company is going in, and they can provide the right set of insights and inputs for the portfolio companies. The VCs can also act as a sounding board for any of the initiative that the founders are wanting to take, any question and answers they have. The VCs can act as a good sounding board. And the other thing that VCs can provide is basically they can help in kind of networking for the portfolio companies in terms of making them making introductions to the right set of prospective customers or partners or investors who can co-invest or investors who can probably come in the next follow-on rounds. So these are some of the things that VCs can add value to uh, the portfolio companies. So I think VCs have been traditionally a very strong driving force for the growth of startups. There was a survey that was done by Stanford University in 2015, and what they came out with was that in 20 like at that time, 42% of the IPOs since 1942 were actually all venture-backed companies. So that kind of shows the significance of the VCs in driving the innovations and spurring the economy.
You know that this sounds very interesting, Radhe. So I would definitely, and my viewers would definitely want to know about your journey as a VC.
Yeah, so as I mentioned earlier, I was working with IBM for 18 long years, and there I had a very good exposure around technology, sales, channels, and also I was focused on working with only B2B startups in the last 3.5 years in IBM. And there I was able to know the mechanics of the startup functioning and then bringing my strong product technology and sales operational role to kind of offer the assistance to the startups. And then I saw a gap for B2B startups in India where there was a need for focused investments and mentoring and then focused connections to the B2B startups. And that's when Arca Venture Labs was born. We had one venture fund in India called Bloom Ventures. They came in as anchor investors and they roped in two other funds as anchor investors. And then we started Arca Venture Labs with the thesis of investing in B2B startups from India that are going into the global markets. And as I mentioned, we made investments across different horizontals and verticals and different business areas. We made investments in cloud infrastructure. We made investments in AI. We made investments in ML, future of work, sales tech, marketing tech, med tech. So we had like good amount of successes in terms of rounds that we made those investments into. And now independent fund called Suvan Ventures, which is into investing into B2B startups from India looking into the global markets.
Wow, this really sounds amazing. So tell us something about the potential of Indian SaaS companies.
So there are on a one single sentence I would say is that there is a strong potential for Indian SaaS companies. This has been validated by reports from Bain and Company, E&Y, uh, McKinsey, Bessemer Ventures, all stating that the Indian SaaS companies that are going global have a tremendous potential. Currently, around 7 billion of revenue is coming from Indian SaaS companies, and this is likely to go up to 30 to 35 billion US dollars in the next few years, depending on different reports say different figures. But in general, the main emphasis of all these reports is that there is tremendous potential for Indian SaaS companies. Some of the reports say that they're going to capture like 7 to 8% of the global SaaS markets, and again in the coming few years. So that is from the like some of the top research companies. The second thing that is there is that we have seen a lot of system integrators like TCS, Infosys, Wipro, that they have really grown up over the last few years, and they have like trillions of dollars in terms of market cap. I think the next wave from India is going to be all product companies, and we are already seeing some strong tailwinds to that direction. Currently, there are 19 unicorns which are operating in the India-US cross-border, uh, uh, India-US or India-Europe cross-border SaaS space, and that I think is likely to go up in the coming years. There's one IPO that has gone for Freshworks in Nasdaq, and likely to see more IPOs. And then couple that with India has like close to 6 million developers, which is out of the 26 million developers globally. This becomes a very strong feeder for entrepreneurs to come out of India and develop product companies from India. Has 16% of the developer population in AI coming out of India.
So, Radhesh, I'm like just curious to know, how does one go about starting a company?
Yeah, so first and foremost, if I want to talk about especially B2B SaaS companies, the first and foremost thing that they can look out for is the business problem that they're solving. If the business problem is very deep and large enough, then that's definitely an area where they can go about starting the company. So I will actually categorize business problems in uh, like three categories. One is if the, and I want to give a probably analogy in the real world. If they if the pain point, business pain is like very deep, or I would say that if they are like having a painkiller, which kind of so startup is offering a painkiller versus the startup is offering a supplement versus a startup is offering a life-saving drug for like for businesses. So if the business problem is if the startup is offering like a life-saving drug, then actually it's a very strong yes for companies to kind of start developing solutions in that particular space. If it is a kind of uh, painkiller, they can definitely look into it. They got to look into the overall opportunity and all that, and then take their decision based on that. And if it is a good to have like a supplement or a vitamin capsule, then it is a tough market to kind of break in and start scaling it. Now, having categorized these particular areas of where they want to look into, the next thing they have to look into is that what is the total uh, uh, addressable market? What is the so by addressable market, by what I mean is that if they kind of look into the number of enterprises they're going to sell into, and then how much money each of these enterprises will willing to spend to that particular solution. That's basically the total addressable market. And if the total addressable market is very big, then that's again a plus point. It's a tick mark for them to go to the next step, which is how much of that is serviceable and obtainable. So if there are like, let's say, for just to give an example, if there are like a addressable market is like worth of $1 billion, and if there are like 300 players already in there, then one has to assess that what is the obtainable market they can have from this $1 billion. And the number is still coming out to be on the higher side, then again that's a positive green signal for them to go to the next step, which is basically into finding out what are the product differentiations that they can offer as against their competition, and product differentiation. What is, I would say, differentiation? I mean, product differentiation is one of the differentiations that they can offer. So whether it's going to be product differentiation, whether it's going to be cost differentiation, whether it is going to be on the customer uh, uh, servicing that they are offering, or whether it just focus on a particular customer segment that they are looking out for. So a bunch of different ways they can actually go about differentiating. That's the other part that they can look into. And if there are like uh, uh, positive signals in each of these areas, that's when they can go about developing their first set of description, and they can start using they can figure out who is their ideal customer profile, and then doing some user interviews and get further validation into that, and then start developing a particular product.
I think that's a wonderful way of explaining. So tell me, what do you look for when investing in a company?
Yeah, when we look into investing into companies, one is the team that goes in, whether it's the right set of combination of the founders who are coming in, are they complementing each other? And if the founders have the ability to kind of execute across different areas, so which could be on the product side, it could be on the GTM side, it could be on the engineering side. That's the first and foremost thing that we look into. Second is, as I mentioned, how big is the market and how deep is the pain point that they are solving in. That's the second aspect. Third is that we look into the product, like competitive landscape, and how they're differentiated against the competitive landscape. This is the third aspect that we look into. And these are some of the parameters that we kind of take into consideration before making the investment.
So, Radhesh, given your experience in IBM as the head of their India startup initiative, what are the broad ways corporates can engage with innovations?
Yeah, one is basically they can look into, if I look into innovations, I can break down into two aspects. One is the developers, and second is the startups. And there are a bunch of ways in which startups can, corporates can engage with startups, if I want to just take that particular sector, because uh, engaging with developers again has its own dynamics and different ways to engage with developers. But just if I want to focus with engaging startups, one is that they can offer so if they're, for example, if they're an infrastructure company, then the startup can go about using that particular infrastructure to develop their set of applications or products. And in the meantime, what the corporates can do is that they can help these startups to sell their, they can offer joint go-to-market for these startups who are using their infrastructure. It could be like a database, it could be cloud infrastructure, it could be APIs, and they can have a OEM program, or they can just have a partnership for joint go-to-market, and that's one way to kind of look into working with startups. The other way is that they can also have an innovation arm, which was something that I was doing in IBM, where they set up a kind of a accelerator where the startups can come and help on the accelerator can work with them in terms of investing into these startups, and also to help them to scale in their journey. And the byproduct of that is that they are also well aligned to the corporate's uh, uh, objectives, and the startup can also look into sell to the corporate as a go-to market, as a end customer. So this is the other way they can look into it. And then corporates can also look into invest in funds which are focused on their like strategies and works well with their alignment. So the funds in turn will be investing in startups, and these startups are the companies that the corporate can engage with. So that's the way to kind of corporate can engage with uh, startup initiative. And then obviously there are a lot of corporates who have their own venture arm where they invest directly into startups based on their objectives and their strategy. So yeah, these are some of the ways which I think corporate.
Radhesh, before I say thank you and goodbye to you, my last question to you is, any key trends in technology you are seeing currently?
Currently, as you know, a bunch of activities are going on, and a lot of new innovations are coming up in generative AI. And if I see the whole way in which AI has been transforming, like AI started with an NLP, natural language processing, and then computer vision, speech to text to speech. Those were the areas that were very much prevalent in the last 4 to 5 years. But I think over the last, especially this year onward, we are seeing a lot of stuff around generative AI. And the power of generative AI is basically the zero-shot learning, which is basically ability to kind of give out outputs for which particular models have not been uh, trained before. And if I look into the use of generative AI across different areas, so the use of, I would say that there are good models are coming up, new solutions are coming up with the use of generative AI across HR, across finance, across customer success, across marketing, healthcare, and then I think a lot of work also needs to be done around the governance of these models in terms of their efficacies, if they are actually having the right set of, uh, if they're not having any biases, they're complying to the regulations around AI models, and having that, and also the privacy around the data that is going in feeding those particular models. So yeah, these are some of the things which are driving the trends towards the current ways in which new solutions are coming up.
Radhesh, thank you for taking your precious time out and definitely talking to us. And I would like to wish you all the best.
Thank you, Priya, for having me.
Thank you.